Hello everyone, welcome back. I'm Zachar, and in this video I'm gonna be executing live on Nasdaq or NDQ 100. It's what I trade, and I took this trade in AM session silver bullet hours, so it is a silver bullet trade. Now I know we haven't seen for a long time, but I have really improved, and I also got funded with a couple firms which I will not mention in this video, but yeah, since my last video I really improved. I put my time into learning, as you can see right there, me executing the trade. Now I am not talking while I'm doing it. This trade is pre-recorded. I'm just doing my voiceover or narration, and I'm gonna be talking of what I'm thinking of, what I was thinking when I was executing this trade. So the bias for this day, for today actually, because it's the same day, the bias were bullish, right? The bias was bullish on Nasdaq and SPX, but on S&P, but Nasdaq was stronger. It was higher, so I traded Nasdaq because it has a bigger potential and basically bigger chance to go up, if you want to hear it like that. So you can see I executed at the order at the at the fair value gap marked with red, and then my stop loss is below the candle that formed the fair value gap. Now this is something you learn at a 2022 mentorship from ICT, but you can go watch that from his channel. I know you probably watched it, but I suggest that when you have some knowledge, you do it again, because you will see so much more gems. As you can see, we are turning into my entry. Now it's not the exact point of the high of the fair value gap, because what I like to do is I like close proximity entries. So I don't care if my entry is a few points off what I wanted, as long as it's there and it's in close proximity, I'm good with it. So as you can see, we are still consolidating. There's a little consolidation on the left before we tap into the fair value gap, which is a very good sign. And then we also have an inversion fair value gap uh, aligned with that fair value gap marked with red. I don't have it marked, but it's there on the left. And then we also have a fair value gap above us that is marked with orange, and this is a SIBI, sell side imbalance, buy side inefficiency. It's inefficient to buy side, and that's why it's my joint liquidity. And what you will see in the future, it will also act as an inversion fair value gap. Now, right, as you can see, we're moving away. So as you can right there, I have my sell limit order at, and you might wonder why is that. So my first partial, there you go, it just took it. My first partial was at this fair value gap, and it was also aligned with a 20-point mark, which is usually when I take my first partial, just to secure a little bit of that profit, because no partial ever failed to pay. So as you can see, we're having some reaction from the 50%, and there you go, I just marked it as IFVG. Now this takes a lot of experience, I have to say. Defining the IFVG and in the bullish order flow and IFVG in the bearish order flow is really hard. I mean, not hard, but advanced. It's hard too, but it's really advanced. As you can see, tap in the 50% once more. I'm actually marking the lunch macro 20 minutes right here from 11:50 to 12:10, and this is usually where market like reaches for liquidity. It starts reaching for liquidity. Now most people you see on Twitter, that I also see on Twitter, is they have their macro times like 9:20 to 9:40. Now this is just not it. The only time macro forms is 10 minutes before, a full hour and 10 minutes after. So for example, a macro would be 6:50 to 7:10, right? There's no macro between 7:20 to 7:40, for example. There's no macro there, but there is macro from uh, for example 7:50 to 8:10. And this is also really important because ICT himself said that any other macro time or any other influencer that advertises macros, like I said, from let's say 720 to 740 is a like it just doesn't work, right? So there's no algorithmic theory that would back this up, and even ICT said that only stick to what he says works, because overall, guys, you have to understand has been in this game for like 30 plus years, and he knows a lot more than we do. And but still, if you put it to work, you can learn really fast and efficiently. So as you can see, I just marked a breaker and a fair value gap. Now what is this? This is a unicorn setup with a bullish draw, and when we have a breaker, as you can see, we took the low and then we came back up, and then I marked the breaker because I knew this was gonna be breaker before we even took the high. Then we formed the FUG, I marked it, and this is a unicorn. I could have added, but I didn't because I wanted this to be a one entry, one trade, and I want you to know that I can do that because scaling in on opportunities is much easier than just putting one entry and knowing what price is gonna do. And you can't really do that if you don't have a set joint liquidity or daily bias before you start trading. Now, we moved away from inversion fair value gap a little bit, and that's really good because what do we have or where we are right now is we are around the closing price of the bearish order block on the left side, which now acts as a mitigation block, which is a bullish PD array. And as you can see, we also have a little order block with 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 price trading into it, and now we are trading away. So we're in a macro, so we are already reaching for liquidity, which is the time window where price starts reaching. Now it's not gonna take liquidity and reject. It's not gonna do that every time. I also seen it on Twitter, and it's total bullshit. It's gonna start reaching for liquidity. Now it can reach for liquidity 1 hour later or few minutes after the start of the macro. Now, as you can see, we are going up. We already moved from inversion fair value gap a lot, and we're inside macro. So I would place my stop loss. I could place my stop loss below the inversion fair value gap, but I'm gonna leave it as it is and I'm gonna move it later because, as you can see, having like this risk, having some sort of risk open while trading is really important, because if you just move your stop loss to break even every single time, you are a little bit in profit. You're not gonna be consistently profitable and have winners like this, right? You have to trade with certain an amount of risk open. Now, what do I mean by this? As you can see, you have to know when to move or trail your stop loss. Now, I could have trailed my stop loss below the low and I would have stopped out, but if that's what your model says, then you should do it. But just don't do it every single time you're a little bit in profit or when you think price can go back again. Now, yeah, this is around 3R right now. 3R in profit. I think the take profit overall is like 6 or 5. I'm not sure exactly. But we have a little consolidation. We just took the low right there. Now, most people would say this as like a market trigger shift, but as you can see, we took the high right now, and immediately we're going lower into the wick because wicks are gaps, and I'm expecting price to react and go up from here. Now we're going up. We see some displacement. This could be certified as a little displacement, but we just went right back into it, so I will not add here. As you can see, I'm centering my chart a little bit so it's more visible. We also have equal highs. If you see this on the left, when we were going down, we have equal highs there. We're gonna see that in the future as well, but let's focus on what we are doing. We're going up, we're breaking new market highs, so new shifts in structure are being made, which is really good for us. And we had a sell side taken right before trading into the wick, and then shift in the market structure, so we are still very nicely moving to the upside. Now this trade has been open for around 1 hour right now or so, and we're also trading inside a lunch hour now, so this could be a little choppy, and I'm not really sure where to move my stop loss. Now I know I said I would have placed it below the IFG, and it probably stay there, and I wouldn't move it even by now. I wouldn't move my stop loss up, below any new low made, but I will soon, and you will see why exactly. So yeah, we have some movement. We are inside the volume imbalance right now, as you can see on the left, so we could see some resistance, but the volume imbalance, guys, is the least strongest or the weakest of all. Now we have push up, we have big push up, and I really like this displacement, and we also took the buy side liquidity, so I took one contract off. It was fast because this is sped up, but I took one contract off right here. So I took one at the inversion fair value gap and the orange one, and then one now, and I have one running. And if you see, I also moved my stop loss to break even. So even if price moves, against the direction I wanted to move, I will be in profit, and I won't have any drawdown or any negative balance. So the only thing I don't like right now is that we are consolidating within this bullish fair value gap, because it looks like it could be forming an inversion fair value gap, especially now that we took the equal highs on the left I was talking about. Now this is a short-term market structure shift right here, which I don't really like, but we can still go higher. Now I mentioned that I wouldn't trade my stop loss until now, because what happened now is, as you can see, we had a market structure shift, which means market could be reaching for lower prices, and we had this shift after we took the equal highs. So right there, just as you can see, I moved my stop loss below the low on the left, because if we take this low, I will be considering this market a bear shifted. Now we could go up and this be just a turtle soup, but from what I saw, if we take this low, then we will probably continue lower or reprice to a discount array before going higher. So as you can see, we are rejecting now. I typed there, if this low gets taken, I don't want to be in the trade anymore. So I wrote that in real time, and as you can see, every single PD array right here was charted or put on chart in real time, or even before it was formed, right? Like I mentioned, and I marked inversion fair value gap before it even formed. I marked breaker before it even formed. Like I marked lunch macro before we even had the delivery, and all of this you get with experience, right? I have been demo trading, I have been practicing since my last video, and I really improved. Right there, I got taken out. So yeah, I got taken out on trailing stop loss, which is nothing wrong. It's what we do, and it's still a really good trade. As you can see, my entry, my exits, and of course like and subscribe. See you in the next video. Goodbye, guys.